Hello and welcome to another informational video for closed-end fund mastery and the Divi-X system. This video is in response to the nearly 4% pullback in the S&P 500 last week on December 18th, which put a lot of things in motion within the Divi-X high yield portfolio, of which performance you can see posted right over here. For the sake of transparency, I usually post any goings on in the Divi-X high yield portfolio in my weekly newsletter. For example, here on November 29th, I wrote about 3 exit positions from the high yield portfolio, which I'm going to touch on briefly in this video. I'm also going to be discussing the unscientific approach that I'm using to manage the Divi-X high yield portfolio. And then lastly, discuss some of the opportunities that presented themselves on December 18th, which allowed me to add some more positions to the Divi-X high yield portfolio. But before we go into that, I would like to announce that coming soon, I will be posting another video, working title, Unraveling 4 Mysteries of Closed-End Funds. It'll discuss certain things like return of capital and discount versus premium and the like, so you might want to keep an eye out for that video. So with that out of the way, let's get on to today's topics. Since we have so many different things to cover in this video, I've decided the best approach to go about doing this video is to address each additional security in sequential order of the actions being applied happened. So taking that approach, our first step would be to go back to the 3 positions that I liquidated back in November. Normally these 3 sale positions would be considered old news. However, as I wrote about them in my newsletter on November 29th, I closed out the article with the sentence, "I would be pleased to re-enter any of these funds should there be a reasonable pullback within the next 3 weeks." So going back to our decision discussed in the November 29th newsletter, we liquidated the positions AIO, SPXX, and BDJ. And below I listed reasons for liquidating each of these. AIO because it averaged over 34% annually for the last 2 3/4 years. This particular fund benefited from the AI craze. As you can see, around October 2023, this thing just kept going up and up and up. Now, I reasoned that this run was unsustainable and there was bound to be a pullback, so I liquidated the position. I liquidated SPXX because the Divi-X yield on cost wasn't growing fast enough to my liking. Now, shortly after I liquidated this position, SPXX actually announced a distribution increase, which would have increased the without Divi-X yield on cost of the position from 7.95% to 9.12%. However, if you've watched some of my Divi-X videos just recently posted, you know that because of the structure of the Divi-X system, in the beginning of your investment, you sacrifice some yield for the benefit of long-term appreciation potential. But while you wait, the Divi-X yield continues to grow every single month. But at the time of the liquidation of SPXX, the Divi-X yield was only 4.69%. And even with the distribution increase, it only went up to 6.8%, which is not bad. But in terms of the Divi-X high yield portfolio, when you're looking at yields from anywhere from 8 to 15%, 6.8% seems rather paltry. So for that reason alone is why I liquidated the position. Had I purchased back into the position with the 6.8% yield, the following month my yield would have been 6.88, then 6.95, but it would have took all the way up until April of 2027 when the Divi-X yield would finally surpass the without Divi-X position. And that's assuming that there's no rise in interest rates or no future dividend decreases. Now, as it would happen, SPXX did eventually pull back to a soft price target that I set at 1709. And had December 18th not presented so many other opportunities, I probably would have bought myself back into this position. Because I did manage to find a couple good opportunities, I'm more than happy with letting this thing get away and settling for my 35% gain. Okay, next we're going to look at AIO and BDJ together, because although these two positions were liquidated for two completely different reasons, they were both managed in roughly the same way. Now, I already told you why I liquidated AIO, because I didn't think the run-up in the price was sustainable and it was due for a pullback. But that's a conclusion I had come to on more than one occasion, and I'll explain that in a little bit. But first, I'm going to tell you that I liquidated the fund BDJ because the fund had back-to-back subscription offers that I took advantage of, which is like receiving a special distribution twice in 1 year. Now, after I liquidated the fund BDJ, they, just like SPXX, also announced a distribution increase. And I did repurchase those shares because I did say that I would be pleased to re-enter any of these funds should there be a reasonable pullback within the next 3 weeks. For BDJ, there was a price pullback on 12/11. I had a price target of $8.65, which was the closest level of support. You can see the touch points here, 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 here. You can see my 100 share position right here at $8.65. And I was able to get back in just before the cutoff for the X date. So I was eligible to get this month's distribution, which I already received. Now, going into a little bit of detail about the life of the BDJ position, I acquired this position in November of 2023, and you can see without Divi-X it was a 10.04% yield compared to my Divi-X yield of 5.82%. So when I entered into this position, I was already at a 4.21% yield deficit, and you can see that my yield continues to climb every month after that. This indicates a negative 14.91% because I did not get this distribution this month because I was out of the position, which I'm going to go over in a little bit. And then in November 2024, a year later, I exited the position again with my yield standing at 7.01% compared to 10.04%. But because I have repurchased these shares with the new dividend increase, my yield has jumped to 9.32% compared to without at 11.06%, which narrows my yield spread to negative 1.74%. And as it stands right now, if there are no further distribution increases or any increase in the interest rate, my Divi-X yield will surpass without in April of 2026. Now, moving on to the similarities in the trades between AIO and BDJ. For AIO, I bought 50 shares, and you can see it was broken down into two separate purchases. That was done by the broker, not me. I entered this position on March 17th, 2022. And if you remember in my last video, going back to golden rule number 1, that when you enter a new position, you set a percentage stop loss for your Divi-X trades. So when they go south, as soon as you open the position, you don't have your you-know-what handed to you. You can see here I entered my position in March with a share price of around $20.77, and in May I wound up selling my position for $18.50 a share, a considerable loss. But the shares continued to decline, and I wound up purchasing them back in May 25 for $17.05 a share. Now, this is where my mindset switched to, gotta dig myself out of this hole, to this thing's going too high, it's due for a pullback. That started back in February of 2024. I sold my shares at $19.44. I set myself a pullback target of $19.06, and it reached that price target 11 days later. And in March of 2024, the price went even higher. So now I'm even more convinced there's going to be another pullback. So I sold the shares. Lo and behold, 11 days later, there was another pullback. I bought my shares at $19.48. Sold them again in June at $21.84. Bought them back again at $21.17. sold them again at $24.24. I did set a pullback price, and it was reached on December 18th with quite a few other pullbacks. And I opted for entries into other funds because I still think this fund has run up too high, too fast. So it looks like this fund is going to finally get away from me. And oh woe is me, I guess I'm going to have to settle for my measly 94% return. And up here you can see from all of my in and outs on this position, I entered at $20.77.94 and brought my cost basis down to $18.14. Now over to BDJ, I have some entry exit points in this fund, but they are for different reasons. Here you can see I entered the position on November 20th, 2023 at a price of $7.37 a share. I had no intention of selling this. It wasn't even on my radar to consider as a selling possibility until I received a tender offer from BlackRock offering 98% of net asset value. And because the fund trades at a discount, subscribing to the tender offer was like receiving a special dividend. However, even though I subscribed all my shares to the tender offer, only 20% of it was filled. That left me with 80 shares. That broke up my Divi-X purchase, because once you set up a purchase in the Divi-X system, you do not have the luxury of saying, okay, I'm going to sell only 20 shares of a 100 share position. So that position is null and void, unless you can see that I sold my other 80 shares at a profit over my initial purchase price of $7.37, and I set a pullback price target, which got filled 15 days later. And then lo and behold, 2 months later, BlackRock sends out another tender offer. I subscribe all my shares, only 25% of it got tendered. Because I couldn't break up the purchase, I had to liquidate all my shares at $8.90 a share, which is a good deal higher than my entry price. But I set a pullback price of $8.65. This is an error, $8.66. But let's just go with $8.66. I now have all my shares purchased back and with a higher yield. And now I currently sit with a total return of 55.7%, which is lower than the 61% I had mentioned in my newsletter. But it's currently down because of the pullback on the 18th. Now real quickly, because of the buy and sell activity in AIO over that period of time, from my initial purchase date to my ultimate end date, I was out of the position for 55 days, and at a margin rate for the leveraged amount of $450, that saved me 1.94% in interest. So the actual end return is really 95.94%. However, when the shares were sold, it not only eliminated the leverage associated with that position, but the principal was returned back to the portfolio, which reduced the margin amount outstanding for all the other positions that are also in the portfolio. So there's a margin interest rate saving from that, which almost doubles the 1.94%. And the same thing goes on for BDJ. I had my positions were out of the market for 33 days. That added another 1.41% to the current 55.7%. And for the same reason listed before, because the principal gets added back as well, it also reduces the outstanding margin balance for the other positions. Okay, to make sense of today's topic's headlines, you've been hearing me use the term pullback quite a bit in this video. And pullback refers to when a security pulls back to a certain support level, as I demonstrated in BDJ. Now, I know when these securities reach a certain support level because I maintain a market list of a wide range of securities. And as you can see here, for example, today the security ASO was triggered when it reached a price point of $59.60. Normally when an alert is triggered, I'll go to the chart of that particular security and I'll evaluate whether or not it's behaving in a fashion that would warrant action to be taken towards it, such as a buy. Now, I had to export my watch list to a spreadsheet to preserve the record of December 18th, because on my trading platform the trigger status disappears the following day. Now here we have the triggered status of all the securities that I watch on December 18th, and you can see that there are about 35 that got triggered. The fund SPXX, it triggered 2 days later. The neat thing about having so many triggers go off at one time is that you know that there's going to be opportunities in there somewhere. The frustrating thing about it is that it has taken me months to establish these price targets, and they all get wiped out in one day. But that's the nature of the game. Anyway, regarding the fish jumping in the boat, limiting our list to only closed-end funds, we have the fund LGI, the fund IDE, spoiler alert, you can see I already made that purchase. AGD, my good friend AIO, BDCs that I have or ABDC I have included in the Divi-X high yield portfolio SAR. AOD, which is what we discussed in my last two videos, it has now since hit another price target, and you can see I purchased some more. VNQ, that's included in ETF Mastery. NRO, IFN, and the aforementioned SPXX. Now I took all these funds and I pasted the tickers into the fund comparison tab on the closed-end fund mastery, and they all have decent looking scores and final scores, and only the funds AGD and AOD fail to qualify as CEF Mastery qualifying funds only because they fail to meet the distribution's remaining minimum. And the fund NRO doesn't have a qualifying score and also has a deficit in the estimated distributions remaining. So right away that leaves me with the fund SPXX, which we already ruled out because of the low yield. It leaves the fund IFN. I will not be investing in that because it is a rolling quarterly NAV fund and the distribution fluctuates frequently. We have the fund AIO, and as I mentioned earlier in this video, I am parting ways with that fund for now, which leaves me with only LGI and IDE. And from the previous spreadsheet I showed you, you already know I made my purchase in IDE. A better fund. It has a positive long-term NAV price change, a higher score, reported a higher percentage of income to distribution, a lower distribution yield to NAV than IDE, and a higher earnings surplus, which equates to 48 monthly distributions remaining. So why did I pick IDE over LGI? That's a good question. In hindsight, I should have purchased both, but my mindset at the time was either or. And the only reason why I was looking at IDE in the first place is because one of the funds in my high yield Divi-X portfolio, ASGI, I noticed in the corner of my eye had almost pulled all the way back to my cost basis of $17.17. That surprised me. I was like, where the hell did all of my appreciation go? You see this trend line I drew right here? One of the features in Thinkorswim is if you right click on a trend line, in the menu it sometimes gives you the option to issue a trigger alert when a share price crosses above or below the trend line, depending on what you tell it to do. You can see there's no option for this trend line here. So I did not get the warning, and here's what happened as a consequence. And notice where it pulled back to, a level of support. Anyway, I was a little ticked about that, and since I recalled IDE, another infrastructure fund, being in the triggered list, I thought I'd give that a closer look. So what drew me to the fund is, one, it is a CEF Mastery qualifying fund with a score of 29, a final score of 32, and an estimated number of monthly distributions remaining of around 20. But another thing that piqued my interest is its steady decline in the paid-in capital, while there's been a steady increase in undistributed earnings. And it turns out that the fund IDE, for quite some time now, have been repurchasing their shares at a discount. So professional curiosity has me curious as to what the end game's going to eventually be for this fund. Now you might ask, why didn't I just buy more ASGI? The fund pulled back to a a very low support level. Wouldn't that be a good time to get in? And the answer is maybe. But when I first took my position in ASGI, the fund had a score of 34, an estimated number of monthly distributions remaining of 14, and a final score of 35. Today they have a deficit of 4 estimated monthly distributions remaining and a final score of 19. So compared to IDE, the quality is just not there. So now the flip side of that question becomes, if the quality is no longer in ASGI as it once was, why not sell ASGI and buy more IDE? And that's a good question. It's because this month I'll be making 17.84% in yield, and with the distribution cut taking effect next month, it'll drop down to 16.75, but it's still considerably high. So for the time being, we'll sit where we are in this position. Okay, to wrap this up, I'm going to go ahead and play my comments regarding AOD from a video 2 videos ago, and we're going to see how my comments have played out since I made them. Next trading session, and as you can see, the fund AOD did currently bounce off of that level of support. You can see my buy order for 200 shares at $8.71 over here. However, this isn't a done deal yet. This thing still could go down. Tomorrow is an election. It could wreak havoc on the market, so you have to be prepared for anything. But regardless of what happens tomorrow, this is where my mindset is. If, at this point, the fund continues to increase in value, I'm happy. If this level of support does not hold, I will likely accumulate more shares at the next level of support, $8.45, if that level of support holds, or even if the fund finds support at the 200-day moving average. If there's a modest dip below this support level, say to maybe 831, I will still consider the support level held. And then you can see we have another support level around 812. Okay, those were my comments regarding price action on AOD from 1 month ago. Now let's see how it actually played out. On December 18th, AOD dipped below my price target of $8.45. Briefly, I purchased more shares at $8.42, and the session on 12/18 wound up closing at $8.43, 2 cents below my target price. However, in the next 2 following days, there were more sellers than buyers, and the fund briefly touched $8.30, 1 cent lower than my $8.31 price target. And unfortunately, the bounce happened right away, so I was not able to buy more shares at that price. This price target here of $8.43, I'm going to eliminate that. That's just there to give you a point of reference. But I did set a price target of $8.30. Should these shares come back to revisit that level, I might accumulate more. Okay, so that wraps up this video. I hope you found it useful. If you did, please give it a thumbs up. If you have any questions, you can contact me directly at TheDividendTimes@outlook.com or leave them in the comments below. If anything in this video intrigued you to the point where you want to learn more, I have several links in the description below.